Good afternoon, everyone. I'm Nancy Widrago with the University of Illinois Extension. We're happy to host another BEAD Deep Dive with the Illinois Office of Broadband and the Illinois Broadband Lab, and we're happy to welcome back Devin Bronstein, who's going to intro today's session and provide some content and provide some info about speakers who are also going to be presenting today. We're very grateful for all of you and your education for this audience today. Devin, thank you so much for being here, and I'll go ahead and let you take it from here.
Great. Thank you so much, Nancy. Hi, everyone. Devin Bronstein here from the Illinois Office of Broadband. We are back for our weekly webinar series around the BEAD program and diving into different specific topics from the initial proposal volume 2 that you will see appear in our notice of funding opportunity. So context here is that we want to make sure that folks are familiar with these new requirements that might be different than previous Connect Illinois rounds, and offer a space for questions and feedback here together. So we'll kind of break down the BEAD process in each of these Wednesday webinars and focus on different topics. So for today, you can go to the next slide. We'll first run through a recap of the BEAD program, progress to date, and where we are in our timeline. Then our two topics will be the BEAD match requirement and an overview of the BEAD low-cost plan requirement. So we'll start with a recap of BEAD and where we are to date. For those who are new here, BEAD is a federal program to connect every last unserved and underserved household to high-speed affordable internet. So it's a $42 billion federal grant program, of which Illinois was allocated $1.04 billion to connect all of our households to high-speed internet service. These funds will go towards deploying broadband, upgrading infrastructure, connecting community anchor institutions, and so much more. So here's a recap of the BEAD program as it relates to Illinois specifically. As I shared, we were allocated $1.04 billion to connect all of Illinois' unserved and underserved locations over the next 5 years. The goal is to ensure universal coverage, and we're required to prioritize fiber projects, but are also able to use non-fiber technologies to make sure that we're reaching universal connectivity. We have a prioritization order, first focusing on unserved locations, then underserved, then community anchor institutions, and that is based on the speeds available at each household. We are required to run a sub-grantee selection process over a 1-year period, and we'll also focus on improving broadband affordability, which we will be talking about today. And final recap slide here. This is our timeline. So we are rolling through all of these steps really since last summer. Most recently, we have wrapped up accepting applications to pre-qualify to participate in the BEAD program. So this was an opportunity for prospective applicants to submit materials demonstrating their capability to deploy a broadband network from a technical, operational, and capacity standpoint. So we have received more than 40 applicants, and all 40 plus entities have now received feedback from our office on their submissions. So we're going through about 2 rounds of review before we wrap up, and folks can take that final feedback and incorporate it in their formal applications this fall. Just a reminder that participating in pre-qualification is not a requirement in order to participate in BEAD, but we're really grateful that so many of you did choose to participate, because the hope is that it will make the BEAD application process all the more smooth and efficient, going in with that extra added knowledge. So the next big milestone is actually kicking off sub-grantee selection, and that'll be marked by publishing our final BEAD map of eligible locations, the notice of funding opportunity, and then ultimately that application package this fall. So we are aiming for October, and this is dependent on NTIA sign-off. But in the meantime, we are utilizing all of this time to work with you to make sure you're up to date on these policies and details that you will then see in the NOFO. So we'll go through that sub-grantee selection process and then pull all of the provisional winners and the detailed plans into a final proposal, which will then be submitted to NTIA next early summer, and we'll seek their approval and then execute grant agreements. So next, I will hand it off to my colleague, John, to talk us through the BEAD match requirement.
Okay, thank you, Devin. Is my audio working well? Yeah, okay.
Sounds good.
Okay, so we're going to cover two topics today. The first of which is BEAD, and BEAD match. And just before I go into the slides, let me just kind of give you the sort of the usual disclaimers slash explanation here. So BEAD is a federal program governed by a very detailed federal statute implemented by NTIA at the federal level with a number of requirements. Every state has to follow those requirements, and obviously Illinois is going to follow those. Illinois' approach has been, though, to make sure we're following the requirements, but also wherever possible, create maximum flexibility for applicants relative to those requirements. So both the topics we're going to talk about the next 45 minutes or so, the match requirement and the low-cost plan, these all reflect fundamental requirements at the federal level, and we're going to now walk through how they're implemented by Illinois in ways that hopefully will make sense and also be attractive for applicants pursuing the BEAD funds here in Illinois. Okay, next slide. Okay, so match. Let me just start with a very fundamental match comment for the BEAD program. There's two match issues with respect to BEAD in Illinois. Okay, so first, in the federal law creating the BEAD program, the standard requirement is that every BEAD grant, every BEAD sub-grant is what it's technically called, has a 25% match associated with it. And we'll talk about that for the next couple of slides, but just as I think everyone knows, fundamentally, the match is the portion of the total project cost that is provided not by the state, but by either the applicant itself or some other third party that's also supporting the project. So very, very simple starting point. If you have a project that costs $10 million, if your BEAD award is $5 million, your match would be $5 million. And then there's rules about what that match looks like. So that 25% minimum is the standard in the BEAD statute. Now, really important topic that we will talk about a bit here as we go. That requirement can be waived, but it only can be waived by NTIA. So just to jump ahead of the next couple of slides for a second, the state of Illinois can request a match waiver for a given project as part of its final submission to NTIA. There are some standards and some direction NTIA has provided about that, and we'll talk about that. But if you do need to request a waiver, that is something that has to be approved at the federal level. Okay, and so again, we'll talk about that, but just keep that in mind. 25% is the baseline. A waiver is possible, but the waiver has to come at the federal level. The state of Illinois itself cannot just waive that requirement on your behalf. Now, second match issue in Illinois is that the match component of an application is scored, meaning as part of your application in wave 1 or wave 2 or wave 3, as we've been talking about, every application you will include in that application not just the amount of BEAD funds that you request, but also a description of the total project budget, so that then the state can essentially see what the match level is associated with that application, and points will be given for higher match. And so this is essentially the state saying, other things equal on an application, we want to favor applications that are putting in more outside funding other than the BEAD funds themselves. That advances the goals of the program, and therefore you do get points associated with that. Okay, so both those are very important to know. We're going to walk through those now, but just fundamentally two separate match questions. 25% is the minimum for the program unless it's waived, and then every application in Illinois will have its match level assessed and scored as part of the selection process. Okay. A little bit more just to go about what exactly is match, right? So as I talked about, it's the portion of the project's cost that's not paid for by the federal BEAD funds. And so the bottom left of this slide just gives you the simple equation. The federal BEAD contribution, how many BEAD dollars are you requesting, and how many are you going to get if you're the selected applicant, plus whatever that third party contribution is, which can be everything from just your own private funds to maybe other sources of funds from other third parties, a nonprofit, a state, a county, other sources. But A plus B equals C, the total project cost. A few other kind of secondary points. The implementation of this match requirement in Illinois will follow all the federal requirements. And those federal requirements, first and foremost, start with what are called the 2 CFR Part 200 rules. You know, if anybody hasn't done it, you can type 2 CFR Part 200 into Google and you'll see it come up. Essentially, these are the federal regulations that deal with federal grants of the type that include BEAD. So there are all kinds of definitional rules about what counts as match. One particular example, match can be either a cash match, you know, so that's kind of the obvious example of you as a private company, for example, have certain cash reserves and you're going to contribute that to the project cost. In-kind match is also permitted under the BEAD rules and in Illinois. Now, there are very particular definitions for what counts as an in-kind match. And so just going over to the right-hand side of the page, if you want to go deeper on match specifically, 2 CFR 200.306 gives a number of the kind of requirements for match. You can kind of see the bullet points here on the right. You know, it has to be verifiable. I mean, in other words, you know, you have to have sort of accounting level verification of the cost that you're saying as part of your match. One very important thing that we're going to talk a little bit about over the next slide or two. You can't do double dipping. You can't claim as match on a BEAD grant something else that was already funded by a federal award. Now, that's the general rule. There is one exception to that I'll talk about in a second, but kind of no double dipping. Again, think about this if you were the federal government just trying to kind of keep track of funds, you know, that kind of has a common sense appeal to it. Has to be necessary and reasonable to the project, right? For example, if you want to claim certain existing infrastructure or services as in-kind match, you have to demonstrate that it's the portion of that existing infrastructure that is directly necessary for the point of the BEAD grant, which is to reach eligible locations, right? So there's sort of like a necessary and reasonable, again, kind of common sense if you think about it. And then again, it has to be specifically allowable under the Subpart E rules, which you can take a look at. You know, bottom line is there are specific requirements in the Part 200 rules. If you look at them, they have a general common sense appeal to them, but these are what have to be followed. And just to be really precise about one point here, when we talk about the applications you're going to make for BEAD in Illinois, each application does have to have associated with it not just how much BEAD dollars you're requesting, right? The first part of the equation on the lower left here. It has to also describe what is the match you're going to bring. And that match will have to be described in a clear way that follows these Part 200 rules. And then you're also going to have to describe like what is therefore the sum, right? What is the total project cost of the project that you're proposing to build in the application? And that also will have to meet the various BEAD allowable expense rules. So we'll be saying more about that as we go, but just keep that in mind. Your BEAD application in Illinois has to provide a full project budget, documentation of your match, has to follow the allowable expense rules. There'll be templates. I mean, that'll be provided in some of the application materials, but it is a really important planning aspect that you're not just doing your BEAD funding request, you also have to do the full project budget and the match. Okay. Next slide. Okay. I talked about this a bit at the beginning. So BEAD statutorily 25% is the minimum. It can be waived. There actually are two categories where under the federal rules the match may not be required. Okay, so the first, it's a limited case in Illinois, but it's a very clear case. As part of the overall BEAD program, NTIA has defined something called high cost areas. Now, first, really, really important, a NTI high cost area is not necessarily the exact same thing as a hard to serve area under Illinois. Now, there'll be more information coming out about that, but a high cost area is a specific thing. NTI defined them, it was last year sometime. They are defined as specific census block groups. There are 6 of them in Illinois. Their CBG IDs are listed there on the lower left. Any BEAD grant in a high cost area CBG is exempt from the match requirement. Okay, so that's just like a baseline rule, federal level. A grant in one of these high cost areas, there are only 6 of them in Illinois. There are more of them in some of the very, very high cost states, for example. Does not apply the match requirement. Okay. Second category is what I talked about. The 25% is the default. It is permissible to request a waiver to NTIA as part of a specific sub-grant agreement. NTI has the discretion whether to approve that or not. To be really clear, if you do not meet the 25% requirement and NTI does not approve a waiver, you cannot receive the grant. So the question of, is it necessary to request a match waiver should be a last resort. Unless you're fully within one of these high cost areas, because it is up to NTIA. NTI has provided some guidance. There are some possibilities there, but your default assumption should be go for 25% match. That said, last thing I'll say is I do think it's fair to say that NTI realizes that across the whole country, there are certain areas that need BEAD support where that match may not actually make economic sense. So that's why waivers are possible. So you just have to approach it eyes open. If you can do a 25% match through any of the sources that are available, that is by far the more straightforward approach.
And Jen, I'll just jump in here. So once we publish the final BEAD map, there will be different layers that indicate what is a hard to serve area, what is a high cost area. So when you're going through and strategizing around your application, you'll be able to click on a layer that shows these census block groups that are high cost areas. The goal is to, neatly fit them into project area units, but in the event that there is overlap or part of a project area unit might be a high cost area, part not, we would label that on the location level. So kind of how to calculate where that match would automatically be waived or where we would, have that approval to pursue the match waiver from NTIA. And just second quick point here is, Illinois specifically included an option for a third wave to make sure that we're picking up the hardest to serve areas of the state. And if match waivers weren't granted earlier, that wave 3 is where we would really be, pushing hard to make sure that we're capturing every area. And some of those might include areas where it just doesn't make financial sense to put forth that full 25% match.
Okay. I think we can go to the next slide, Matt. Okay. Quick deep dive on in-kind match. So in concept, this would be, rather than contributing just hard cash dollars, you're contributing to the project, essentially the economic value of other non-cash items. A couple of examples. Part of the project cost could be employee time. Probably the most straightforward example could be you have certain existing, say, middle mile infrastructure in an area. And that middle mile infrastructure actually is necessary to reach the unserved locations or the eligible locations in the project. You can't say the entire cost of all that is attributed to the BEAD project because obviously you're not using all of it. But if you can properly show how the parts of it that are necessary to the project, that can be treated as in-kind match. Look, the basic rule here is look at the 2 CFR 200.306 rules. Those rules apply at the federal level, and they therefore apply at the Illinois level. But Illinois does not intend to put any extra limitations on what can be counted as in-kind match. One really important note, by the way, it's the point on the bottom right here. This is a little nuance about how in-kind match rules relate to BEAD specifically. As you know, and as we'll talk about going forward, BEAD does have a requirement for Build America, Buy America. And there's been various activity by NTIA lately to sort of show how a BEAD grantee can comply with those requirements. Anything that you contribute as in-kind match to a BEAD project also has to meet those BABA requirements. So let me just give you one example that's come up in some other context. Let's say you're a provider and you have an inventory of some optical network terminals, for example, that you might have bought over the last 2 or 3 years, and you have inventory. As a starting point, that would be a good example of in-kind match, perhaps. You're using some of that existing equipment, and that's going to the cost of the BEAD project. However, those existing inventory would have to also be shown to be BABA compliant under the BEAD rules. So just things like that have to really be managed very carefully, because BEAD does have these very hard and fast requirements under the federal law. Okay, I think we can keep going.
I think
well, actually, on the prior slide, didn't we? I'm sorry. Yeah.
Yeah, I think we missed slide 12. If you want to go back there.
Yes, I was going to say, because there was so yeah, thanks Devin for that. Okay, so this is the left-hand side shows these are all examples of where else might match come from other than the sub-grantee himself. So the upper left, okay, the sub-grantee, you, the private company, you have cash in your own private bank account, lines of credit. That obviously is match. But there are other examples, right? For example, let's say that you have a grant from a nonprofit who also wishes to support closing the digital divide. That nonprofit may contribute a certain amount of cash as part of your match. That's permitted. Local governments, right? There's lots of examples shown here. Now, I mentioned a couple slides ago that the one limit, even under the basic federal rules, is you can't double dip in general. You can't say, I got prior federal funds to pay for this thing, and then I'm going to use it again as match for this new federal grant. However, there is a statutory exception to that rule in the BEAD program. And this is a little bit complex, but this is the federal law, so we're just dealing with the federal law as it's written. The federal BEAD statute, which is part of the IJA infrastructure bill from 2021, it specifically accepts from that general requirement any funds provided under the 5 bullet pointed programs or statutes listed here on the right. So these are all of the various federal broadband programs, or really these were broader COVID relief bills by and large that included broadband elements. So the BEAD law says you are permitted to use as match, including in-kind match, things that were funded from any of these programs listed on the right-hand side of the page. So for example, if you got an ARPA grant and you have deployed broadband infrastructure with your ARPA grant, or you are a county government that still has some ARPA state and local relief funds available, still just in cash form, either of those can be used as match for a BEAD grant. It's specifically provided for in the BEAD statute. Okay, so that could be quite important depending on where you are on the map and what your prior programs look like. Now, very, very important other caveat there on the bottom right-hand side of this page, which is if you do that, then your BEAD program use of those funds has to still comply with all of the original federal programs requirements. So, easy example, as anyone that has an ARPA grant knows, the ARPA grants have to be completely completed, deployed by the end of 2026. And that's coming up kind of quickly now. So if you intend to use ARPA money, ARPA infrastructure, but especially ARPA money as part of a BEAD match, even though the BEAD timeline is 4 years from the time of the grant, if you bring in ARPA funds, you then subject that part of the project to the much tighter ARPA timeline. Okay, so you don't get to escape any of the basic requirements for a given program, but you are allowed to, for these programs listed on the right, these are permissible sources of match funding for BEAD. Okay. Did I hit everything there, Devin? This is a kind of a really important, I mean, it's kind of complicated, but it's very, very important because there has been a lot of ARPA dollars in Illinois, of course. Okay, so Matt, I think that's it. I mean, that's a lot on match. Hopefully that sunk in. You know, we can have follow-up questions, but I think let's go to the scoring element now. I think Devin's going to start on the scoring pages, and then I may add a few things too.
Yeah, this is really just a recap from last week's conversation, breaking down the scoring sheet that shows that while there is that match requirement, there's also opportunities to make your application even more competitive by providing a greater percent of the project cost as match. So this slide just kind of recaps that this part of the scoring rubric is worth 20% of the total. And you can see on the right-hand side how many additional points you can earn based on the percentage match that you do provide. So if you're providing 30 to 34.9%, you can get an additional 2 points. Up to providing 60% or more of a match, you can earn up to 20 points. So again, not required beyond that 25%, but this is an additional opportunity to make your application stand out as it relates to the score that it will be awarded per the scoring rubric.
Yep.
And on the bottom here, we just have a note around documentation of that match. So we'll want to see validation that that match is available, is committed to this, and will come to fruition should you be awarded.
Yeah, and Devin, if I could just then add one thing that relates to that last point. So not only do you have to clearly document the source of match, as Devin just said, obviously to do this scoring element, and because it's a scored element, it's very, very important. Your application has to include a project budget for the deployment project associated with your application. So your application, say it's for 10 PAUs, it includes 800 eligible locations. Obviously, there's infrastructure deployment associated with reaching those. For this scoring element on the application, you have to submit your proposed budget for that application. And because it's scored, and because I'm sure everyone listening to this call is capable of doing the math, it's quite important that that budget is valid, is accurate. You know, you can't just kind of claim some really big budget without a lot of support and claim a higher score here. So there is going to be more information coming out from the state pretty soon about the specific allowable expense categories. Now that's going to largely follow the federal rules, as I've been saying, but we will give you a quite clear list of allowable expenses. The application template will probably provide some structure for how to organize your expenses, but because this is a quite important element of the program, it's scored. You know, your application will be reviewed in part to make sure that you're using only allowable expenses. There is some review of it because obviously this is an important element of the scoring. So just from a planning standpoint, even though we're still more than a few weeks away from wave one and starting, this is definitely an area where you're going to do some additional preparation to submit your wave one applications. And so just start being aware of that now. And as I said, there'll be more information coming out quite soon from the state around exactly what those expense categories are going to look like.
Thanks, Sean. And on the next slide, again, this is a recap from 2 sessions ago, but just to speak to how your match might factor into the fixed amount subawards approach to milestone-based payments. So to recap, fixed amount subaward payments are based on awardees completing various agreed upon milestones and capturing or getting payments and subsidies based on meeting these milestones rather than submitting every receipt. And the goal here is to streamline the process of payments, reduce unnecessary red tape, and make sure that awardees are getting those capital dollars upfront in line with how those dollars are going out. So you can see on the bottom left-hand side here, as you meet milestones, then the payments will be released, will require evidence along with those milestones. So the bottom line is that if you are incorporating a match, the match spend has to be reported along with each milestone, and it should be incorporated into that broader budget. All right, I think we can move on to our second section here, and then we will open it up for questions. So I'll hand it back over to John to talk us through the overview of our low-cost plan requirement.
Okay, thanks. And actually stay on the prior one for a second. Let me do my usual sort of high-level setup before people start reading the slide too closely. So low-cost plan requirement. This is another federal requirement. All states have to have this, and it was a mandatory element of BEAD plans. Just remember that in the BEAD program, there are two different categories, though, that relate to affordability. So the first one is what we're going to talk about now, the low-cost plan requirement. There is a second, totally separate category which has to do with at what price you plan to offer, for example, if you're a fiber applicant, a gigabit symmetrical plan. That is called the affordability scoring element. That's separate. We'll talk about that separately. This low-cost plan requirement is not scored. It is just a mandatory requirement of any BEAD grant per the federal requirements. Okay, so let's now take a quick review of what this looks like. So let's see. As I said, it's required by the federal statute, and there's an issue about how eligibility works that I will actually, let's just talk about on the next slide. So basically, we're going to cover two things: a review of what the low-cost plan option entails, and then a discussion of how you're going to do eligibility, essentially, given that the ACP program at the federal level has now ended, and we're going to talk about what the kind of eligibility implications of that are. Okay, so summary slide. What is the low-cost service option in Illinois? Actually, I feel like I should start with just what's in the middle of the page, which is the low-cost service option applies to one particular service tier. It applies to 100 megabit downstream, 20 megabit upstream service, which is basically the federal definition of broadband, right? So that is the basic definition. And for the BEAD program, it's the definition at the FCC now. So we're talking about the basic federal definition of broadband, 100 by 20. Not gigabit, not all the other higher speeds that most of these technologies can do now. This is the baseline 100 by 20 service only. Okay. For that service, the low-cost plan requirement is, just now going back to the top of the page here, that level service is offered for $30 per month outside of any tribal lands, or it's $75 on tribal lands. Now, those two levels basically relate directly to the ACP program, which during all of the BEAD development was available. It's now ended, as I think everyone knows, and unclear whether there's a new federal program there, but that's where those two cost figures come from. Now, if there is a successor program to ACP, the provider must also allow any such successor program benefit to be applied against that service. Now, that probably should be pretty straightforward. It's hard to think why you wouldn't want to do that, but that is also a requirement that if there is a successor program, the benefit applies. And then relatedly, you are required to participate in such a successor program if there is one, right? So if ACP comes back or some other version of it, if you have a BEAD grant, you have to participate. You have to let your eligible subscribers participate in it and apply against this low-cost plan service. Okay. 100 by 20 also has to meet the latency requirement. So essentially it has to meet the BEAD minimum requirements. A couple other important things. You cannot have any data caps, usage limits. non-recurring charges, sign-up charges. It is the cost to the subscriber is that $30 per month, all in, period. And then one other element is if at your own initiative as a provider in the state, you subsequently offer a low-cost plan with performance levels above the 100 by 20 minimum, you also allow your subscribers to this low-cost plan to essentially opt into that. So if you voluntarily improve that performance for some subscribers, you have to let everyone also participate. Okay. So that's, I mean, I think anyone who's looking at BEAD is pretty familiar with this. I mean, these are basically these are the fundamental federal requirements, and Illinois basically just applied them in a pretty straightforward way. Okay. One thing to note, by the way, one thing you will not see listed on here that we may get a question about is there an annual inflation adjustment? Now, for those of you that have done lots of homework already, the Illinois Volume 2 does not specifically say that there is a CPI adjustment. Some states do. However, it is pretty clear in the baseline NTIA requirements that the idea of an annual cost adjustment is permissible. So again, I mean, Devin, jump in if you want to. I mean, I don't think that there's a reason that the state would not want to do that if it was clear that there was a need for an annual cost adjustment. So just, yeah, I mean, just as a baseline economic reality, I think that probably would be provided it is consistent with the NTIA requirements, even though it's not specifically in the Volume 2. Okay, and why don't we just now do, oh, yeah.
Yeah, no, I was just going to echo that. It's not written in, but it is a possibility if we find it to be reasonable. So that could be based on the CPI or other reasonable metrics.
Right. Okay. And then why don't we just take a look then at the eligibility slide. So again, those of you that have been looking at BEAD for a while are already going to be familiar with this. The baseline federal requirement for what subscribers are eligible for this low-cost plan has been defined as the same eligibility as for the ACP program. The gray box here in the middle lists those. I mean, the most basic one is income level that is at or below 2x the federal poverty guideline, and then a set of other specific federal programs that are also deemed to be equivalent to that for eligibility purposes. Now, knowledgeable people will say, well, what happens now that the ACP program at the federal level no longer exists? The answer is the eligibility standards do not change. It is still the same eligibility requirements. And then even more knowledgeable listeners will say, well, how exactly am I supposed to decide who's eligible, given that technically, or not technically, in reality, the ACP program at the FCC and USAC is not in operation anymore? The answer is NTIA will be working with states to come up with an eligibility verification process to do this. Providers are not going to be expected to review the tax records of their subscribers, so there'll be more information coming out on that. It actually requires a fair bit of work at the federal level. But for planning purposes, you should assume that there will be a kind of a government solution to this eligibility. It's not going to be a new thing that you're going to have to do just within your own company. A couple other things. Yes, this low-cost service option commitment is going to be part of your enforceable grant agreements. So if you win a BEAD grant in Illinois, one aspect of that grant agreement will be a enforceable commitment to offer the service that we just described. That will persist for the duration of the federal interest, which, for broader purposes is defined as 10 years beyond the end of the deployment project. So you have 4 years for the deployment project. So, it's a 14-year commitment. And then there are some other reporting requirements as part of the BEAD program that also require you to do full reporting of what your prices are for different speed levels, and that's a semi-annual report. It's just part of the broader BEAD obligation. Okay, so again, this is pretty straightforward baseline federal requirements for the BEAD program. Illinois has adopted them and will apply them just like every other state will.
Thanks, Jen. Just a couple of additions here. I do want to just reinforce that eligibility check tool piece. I've heard from a couple of you about concerns about collecting PII, the sort of time and costs associated with doing that verification of eligibility. So I think that is really great news that NTIA does plan to provide a solution for that. And if not NTIA, I think that's something that the state would prioritize to make sure that the affordable plan option was available for households who need, but was not, providing an undue burden on our provider community. So I'm happy to reinforce that one. I also just wanted to reinforce the length of time that the low cost option would need to be available. So technically it must be available for the useful life of the network assets. And that in this case is defined as 10 years after the year in which the sub-grant has closed out. So there could be that year-to-year change based on things like the CPI, but overall it is 10 years past that closeout date. And with that, I think we can go ahead and open it up for questions. And I see some questions in the chat, so I will just run through these. All right. So first we have a question, will there be a list of pre-qualification participants published? Thanks for this question, Jeremiah. So this is something that we have considered. I think if it is of interest, we could reach out to those who participated in pre-qualification to get their permission to publish that list online, with the caveat that participating, doesn't mean that they are formally pre-qualified or that they will definitely participate in BEAD. And on the flip side, there might be providers who opted to not participate in pre-qualification who will be participating. So I think we can certainly publish that list. We just might need a little bit of time to get that permission from folks to make sure that everyone is comfortable with their entity name being out there. But I can make a note about that one. And if anyone does have a specific piece of feedback on that, if you're here and a provider who did participate in pre-qual, feel free to email me or private message me, but I can reach out about that. Is Lifeline considered a successor program to ACP? John, do you know?
I feel like we need to demur to NTIA clearly weighing in on that. I mean, I will observe that Lifeline's got a different eligibility standard.
Mm-hmm.
Lifeline actually requires voice service, which ACP did not. So, I mean, knowing what I know about both programs, they are different. Now, I think NTI hasn't clearly defined what is considered an ACP successor program, but I think our current view is that's not yet been said that it is. Like, I think is the best answer we can say right now, unless Greg or someone from NTI has a additional info there that I'm not aware of.
Yeah, we'll follow up. So we're gonna begin publishing a frequently asked questions document from the questions that come out of these webinars, so everyone can be referring to the same information. So we'll be sure to include that and send it around. Next question about low cost. To clarify, non-tribal land residents would pay no more than $30 per month, and tribal land residents would not pay more than $75 per month. So tribal land residents pay more for low cost options. That's correct. So for households who qualify for the low cost option in non-tribal lands, it's required that that plan is for $30 or less. And on tribal lands, the same thing goes, but for $75 or less. And there is a newly recognized tribe in Illinois. And so previously, Illinois did not have any formal tribal lands federally recognized, and now we do. So if you're looking at the northern region, that is something to incorporate in your plans. Can you confirm that the expectation is that if the FCC benchmark were to increase above the current level during the BEAD commitment period, that BEAD funded networks would be expected to deliver whatever the new benchmark speed is set to. So I'm looking at our volume 2, and the way it's written is that it's 100 over 20 Mbps is the requirement, or greater should that FCC benchmark increase. And for those who aren't familiar with this, the FCC sets a formal definition of broadband based on speeds. It had previously been 25 over 3 Mbps. It is now 100 over 20 Mbps. I believe we marked our requirement as 100 over 20 before the FCC had changed their definition. So now it's consistent, but it seems like could only increase. Although that seems to not happen only every 10 years or so. All right. Any other questions?
Thanks,
John,
Devin.
any other? Oh,
Just wanted to just voice out that if anyone has questions that they want to ask instead with their mic, instead of using the chat space, they can use the raise hand button at the bottom of your screen, which I believe is under the react button. And you'll be called on and able to unmute yourself if you decide to put your question out that way.
going to offer up the floor to John to share any other general wisdom as it relates to either of these two topics, if you have it.
Well, no, I was actually just looking at the last couple of things in the chat. I agree. The person that noted that technically, so on the question of is Lifeline considered a successor program, I actually think that is correct. That since Lifeline predates ACP, I don't think using an English language definition, we can say it's a successor program. So probably Lifeline does not count as a successor program. That definitely sounds right to me. And I would also just agree with what you said, Devin, that, I think the FCC famously is a bit of a lagging definition of broadband. I think the FCC has only changed the definition of broadband 3 times in the last 25 years. So the recent upgrade to 100 by 20 actually reflects the FCC sort of following BEAD up more than the reverse. So if for some reason the FCC did increase that baseline definition, then yes, what the volume 2 says is that the ACP obligation would then follow that upward.
All right, we have a couple more questions coming in. If you have not been getting the follow-up emails, so if you're registered for these sessions, that is the group who is getting the follow-up emails. So just make sure that you're registered. But in the event that you don't get the emails, I just put the link in response to the question on our website on the Sub-Grantee landing page. We post all of the webinar recording slides, and that is where the FAQs will be, and that's where everything that you need to know related to sub-grantee selection will also be posted. So feel free to bookmark that and usually get those slides up by the end of the week. We have another question. You mentioned that the application period for Wave 1 will start in October. If you have not applied for pre-qualification, will you have enough time to make a full application? So we will be publishing the final map of eligible locations, plus most likely that notice of funding opportunity and some guidance around your application for at least 30 days before the application period opens. So you should have ample time to start reviewing that and compiling your application requirements. Even if you didn't participate formally in pre-qualifications, you can use our pre-qualification guidance to start compiling your materials and looking at the benchmarks against which we'll be evaluating those materials. And I can drop that link in the chat so you can use that as a guide. Do that now. We got another question. Since ACP has run out of funding, is it on ISPs to attempt to certify who qualifies for the low-income plan? So this relates to what we shared earlier, which is that NTIA is working on a verification tool or some solution, so the burden is not on the providers to have to do that. One way this might happen is tapping into the National Verifier database. So for ACP, before folks could enroll in the benefit, they had to sign up for the National Verifier with their eligibility materials. And this was all through the federal government through a department called USAC. So hypothetically, if providers or if the state could tap into that database, then it would just be a quick sort of data sharing verification, and providers wouldn't need to be outsourcing, the collection of materials or checking various documents. So the goal and what it's looking like as of now is that no, the answer is no. All right. Well, if there's no other questions, we can end a few minutes early. Stay tuned for next week's session. We'll be focusing on Illinois specific resources, policies, and compliance needs. So we'll have a couple new guest speakers from around the state, different departments who are experts in these areas. And it'll be a really great opportunity to ask questions and get prepared for that application. So we hope to see you next week. Thanks, everyone.
Thank you, Devin. Thanks, everyone. See you next week.